Well, here at the World Assembly of the Oil Council in London, a lot of focus is on the oil price and the supply situation. Are we looking towards a new equilibrium of supply and demand? Well, to discuss that and other issues is Torbjorn Kjus, who is the Senior Oil Analyst at DNB Markets. That is obviously a major concern for all the delegates here. What's going to happen to the oil price? What's going to happen to the supply?
Yeah, definitely, and we have this OPEC meeting coming up 27th November, which is probably be the only interesting meeting we've had for now 5 years for OPEC meetings. They've kind of been non-events for a while now. But now people are uncertain, will OPEC and I guess Saudi Arabia is the key issue, will they deliver any cuts to protect the price or will they not?
And what's your view? Do you think that they will do?
I think it's not in their interest to deliver too large cuts, but I think they have to deliver something, because in order to keep this organization together, they've been free riding now on the lost volumes from Libya and Iran since the Arab Spring really kicked in 2011. And I think they have to give something. So I presume they probably cut somewhere between 500,000 to 1 million barrels per day for the whole cartel. And then Saudi Arabia will take most of that, remove most of that, and maybe Kuwait and Emirates will take a little bit as well. But the problem is it probably won't be enough, because the global imbalance is really too large right now, and we have seen global inventories building significantly, probably around more than 1 million barrels per day so far this year.
So what do you you say it's a bit of a non-event, or has been up to now. It could well be a non-event in terms of, well, there might be some cuts, but there won't be enough, and the situation is still going to be that it's not enough to get the oil price back up again. And indeed, there's no real idea about where is the ideal equilibrium oil price.
Exactly. So I think what's going on right now is the market is testing out how far down we need to go before you get the growth in the US oil industry down to a much weaker level, because we've seen 1 million barrels per day plus now for 3.5 years, and we need to probably cut that growth in half in order to balance, and that's even with some cuts from Saudi Arabia baked into this picture. So right now, the call on OPEC, the requirement for OPEC oil into the first half of next year, according to the IEA, is 2 million barrels per day lower than what OPEC is right now producing. So 2 million barrels per day, that's a lot. And you know that in other situations, in 2008 and 2009, and in 2001 and 2002, where we had other OPEC cuts, Libya and Iran was actually delivering some cuts themselves. This time, of course, they won't be there to deliver any voluntarily cuts from those two countries, and definitely not Iraq either, who's starting to grow. So it'll basically be up to the core OPEC countries how much they want to deliver of cuts. And I think they have to give something, but it won't probably be enough to avoid further stock builds.
So there is a degree of uncertainty which markets don't like, and the IEA came out with a report only recently, where they were sort of talking about peak growth is sometime in the future, but actually we're almost there now anyway with output.
Yeah, actually the World Energy Outlook said that the US tight oil production would peak at 4.5 million barrels per day, and in 2025, and according to consultancy data that we use, we are already there. And the IEA in their last monthly report said that light tight oil production is 3.9 million barrels per day right now. So we're very close to the 4.5 million barrels per day that they predicted to be the peak by 2025. So obviously these numbers needs to be revised up from the IEA.
So what's your view about where the oil price is going to settle in the short term and in the medium term?
Well, we have said $80 per barrel average price next year, and so that means we'll probably see a $20 drop in the average price compared to this year. That should stimulate demand growth. So we think demand growth will improve in the US mainly, but also some in China. It'll be worse in type India, Indonesia, Thailand, those kind of countries, because they subsidize the price, so you really don't see the effect on the end consumers when the price goes up and down. But in total, you know, there's a difference between $110 and $80 oil prices is $1,000 billion US stimulants to the world economy. So it should provide some extra demand growth at 80 compared to 110. But we also need to see lower production growth from the US. And we really don't know the level where that will kick in. Purely based on well calculations, the internal rates of return could probably take even lower prices than $80 Brent. It's just that many of these players are cash flow negative, and the weakest ones will get capped on their borrowing capabilities. And that's when you might see things starting to kick in with lower activity levels. But we expect that to mainly be a story for the second half of 2015. So we think we are in for a very weak price period in the next 3 to 9 months.
And of course, this is all you know, tied in a very circular way to the discussions that have been going on with the world leaders at the G20, talking about you know, the global economy shrinking. Is there a risk because of that uncertainty you're talking about within OPEC about cutting production, that maybe the oil industry might, as a major driver of growth, might actually miss the window of opportunity?
Well, I think a lower oil price will kind of help the global economy to not become as bad as it otherwise could be. We saw Japan was reported to be in a recession now, and
but could it be too late when they actually finally do come to a decision?
And normally it's they're reactive and not proactive in OPEC. Even with the big recession in 2008 and 9, it took quite a long time before they scaled back enough barrels, and that's why the price dropped even down to $36.60 on Christmas Eve 2008. So and basically people are asking me, how far down can it go? And you know, you can't calculate that. Nobody could calculate that it should stop exactly at 36.60, but we didn't think that was a sustainable level for the oil industry to stay at that level. But still, it got down there. So it's basically, we're in the blind on how far down it can go short term.
All right. Okay, Torbjorn Kjus from DNB Markets, thank you very much indeed for joining us.
No problem. Thank you.